Good morning. This is Arlan Suderman, Chief Commodities Economist for StoneX. It's just ahead of the open here on this morning, this Tuesday morning, April the 8th. I wanted to give a quick overview of what we see developing in the markets overnight. We did see China's stock market come bouncing back as they poured state-backed funds buying into the market to try to elevate it after a utter collapse yesterday. So we did see some stability there. Up to 70 countries have now requested negotiations with the White House to try to bring tariffs down. China is the only one that has stood up to President Trump and said, no, we're going to put retaliatory tariffs on. Now, remember that President Trump stated before he initiated this tariff war that any country that retaliated with tariffs would receive additional tariffs on top. So it'd be best that they not retaliate. China is the lone country to this point that has retaliated with the 34% tariffs on top of what they were already charging. President Trump came out on Monday afternoon and said they need to revoke those before Wednesday, or he will put on an additional 50% tariff. And he will also then cut off all talks that China had requested. And so he upped the ante on China. China responded to saying, we will not back down, we will fight to the end. They seem to be taking this as a fight for their existence. They have clearly stated they have a goal of being the number one economy and then have the number one military in the world. And they seem to see this Trump actions to get their tariffs and trade restrictions reduced as a threat to their existence. That's the way they're fighting right now. Keep in mind that President Xi Jinping has removed people from his inner circle who would tell him what he needs to hear if he doesn't want to hear it at times. And so for now, this thing is escalating. They have left open products flowing through the free port of Hong Kong. So that's a little bit of their way of getting around this tariffs. But that's probably mostly for semiconductors and things that they need. That's not really an avenue for grain flow. But the markets reacted positively overnight. And this is probably the roller coaster action we'll see this week as headlines drive. Most of this morning's headlines, when I looked at them, were negative, but yet we saw 3% gains in the pre-open on the major stock indices. And the grain and oil seeds were all positive as well. And it even has an appearance now of the market starting to figure out we're not getting retaliatory tariffs, but especially not on food-based commodities. And while the food-based commodities, particularly the grain and oil seeds, have not performed well the last several years, they've been showing signs at times of being the attractive alternative. And so this may be one of those times. The corn market failed to break during the collapse of the other markets on Thursday and Friday, continues to hold well with basis firming both the United States and Brazil. Demand is solid right now, and we have some risks due to dry weather in Brazil, as well as forecasters continue to raise alarm bells about potential risks in the Midwest this summer. The flooding over the weekend created challenges for the soft red winter wheat crop. We'll probably see more deteriorations in the quality of that crop going forward. And the hard red winter wheat crop has areas that missed, particularly in the Central Plains, missed the weekend rains, and the forecast is basically dry going forward over the next 2 weeks. And we still have dry concerns in Russia. So we're seeing some money come back to the grain and oil seeds. Downside risks still exist. We cannot rule that out. From a consumer of commodity standpoint, this is a time when you have to look at the opportunities that have been provided and assess whether that fits well in your program, realizing that the lower prices are, the greater your upside risk. From a producer standpoint, you still have those downside risks, but we are seeing some signs of stability. So with that, we'll see how things unfold in today's markets and continue to follow this saga.